Welcome to TradeTheMBA.com. This is John. This report is for the 10th. Looking at the slight, and that's the only way to describe it, slight retracements. We're still well above the ABM daily here, yellow line right there. In fact, let's click and put a little value on those so that you can see them, because while we've got this erratic shakeout down here, I mean, you can see you go from a nice clean rollover to rising. Here we had the nice rise, kind of an intermediate one where we should have made new highs on breaking past the previous peaks. We didn't, and we got a reset of the shakeout during the holiday, and the holiday always throws things off a little bit. And then we're starting to rebuild a little bit of a run here, but it looks lower than the previous one. The big advantage here is that we're still looking at DOC, cyan below red. However, that short-term buyers crossing below can produce a little bit of weakness, and that's exactly what we're seeing at this particular point. Is it time to get concerned about it? Not yet. I mean, you still have the NASDAQ pushing new highs. That's just pointing out a bigger divergence between, again, the Dow and S&P compared to the NASDAQ. Again, once again, we're seeing a little bit stronger strength in the NASDAQ overall, and that's because it took a little bit more of a beating, but that just made things in line as we started the year. So we can see the allocation still towards this technology, but the Dow certainly way outperformed early on with the anticipation of where things will go with stimulus spending potentially. Not confirmed on any of that yet. I think that's where the talks begin, and so I think people are just a little anxious waiting for results. You can see that we're getting a full reset of the shakeout here, and it's taken away this extraordinary overbought, even though prices remain completely flat, you see, and this is the important thing. It's the equivalent of a reset in the status. Central banks got to be very happy putting ourselves right back in the middle of the zone expectation right here of the euro. So that's going to take a little pressure off S&P as far as suffering from earnings difficulties with a depressed euro. And bonds holding up fairly decent. I mean, this isn't a tremendous buy situation. You can still see that we've had the A. We knew that there was going to be a little retraces. It got a little bit overbought in there, but it's actually held up fairly decent. And still within the range, you know, warned not to get too euphoric. This wasn't going anywhere because you still can't deal with the supply. And then you had the unemployment numbers indicating that no, there's not this out of control growth taking place. A lot of the hype and excitement is just on the potential of things changing, and potential has a value early on, but at some point you need to see the results, and consumption of oil and or lack of supply just hasn't materialized. Gold holding up there, and I would expect that gold is going to start to make a bit more of a significant push. And here looking at the 5K, so from way back with the short, where was that short? Let's look at the value on that. 2274, and here we are at 63. It's just taken a while to do not a whole lot of movement, though it's been an impressive retrace on setups, and no complaints with that. It's just going to test these bounds, and as long as it holds right, I would say anything above the 2250 range, you're still looking at a fairly healthy construct. Still looking to move our way back to the 2350 target, which is something we had from quite a while back, but there wasn't any time frame that it had to be achieved. It was just where the market is headed from a technical approach, the way we were looking at things, and I think we're still in line with that move, so nothing has been altered as far as our general concept of what we think is going to happen, which is still more bullish than bearish, and still more market oriented until really yield rates are pushed up, and that is marginally happening now. And if they continue a very slow pace at it, should be healthy, but if they go a little too quickly, that could create roadblocks, and that is a problematic configuration. That's the job of the Fed. That's what they're supposed to be doing, and so far it's worked out okay. As always, though, continue to look for me on the Skype chat. I will post when I have that update completed for the shakeout. It's almost done, and I'm looking forward to getting that one up so that you can see what it looks like, and that will also translate into the buy sells as well as the strategy that we're working on for short setups and that. As always, trade well. We'll talk again later.